Good afternoon, ladies and gentlemen. It's a great pleasure to be here. My second time in Tripoli. Very much enjoying the experience. We have a presentation which I'll get through fairly quickly and try and keep to the 10 minutes. That's quickly a contents. If we go to the next slide. The history of BACB was founded in 1972 as a consortium as UBAF Limited between the Libyan government and Midland Bank and a number of other Arab states. In 1995 it was acquired, HSBC acquired Midland Bank and it became UBAF London and then was rebranded as British Arab Commercial Bank. 2010 LFB raised its stake to 83.48%, with the balance being held by the Moroccan and Algerian states. 2013 we've had success of the bank at the end of 2012. Total assets 3.4 billion, trade and other commitments 1.2 billion, capital $385 million. So quite a substantial bank. I think also not actually shown on the slide is that there's also been quite a significant change in 2013. We've had new management. I started in April of this year. In actual fact, out of our 10 executive committee members, 7 out of the 10 have actually been here less than a year. So there's a new management in place. We have a new head of MENA Markets, Nabil Frick, who hopefully you'll all meet. We have a new treasurer in Darnie Marks. I think also we also have a new attitude to the business. I think in the past we've tended to be, I think, rather regarded as perhaps a little arrogant. And I think I can honestly say now we have a more positive attitude. We're very keen to be working within the LFB group. And I think very much we're open for business going forward. I think the next slide, this just shows very briefly the shareholding, 83.48% LFB and 8.26% Algeria and BCP. I think our business model is very much on the wholesale side. We're very much the leading London bank in London. There's another bank called ABC or something, but we don't see very much of them. Rated BB by Fitch. We have a long-standing commitment to our niche markets, specifically on the trade finance side, where I think we are recognised as one of the leading London banks. I think we probably have the largest trade department actually in London now, because most of the big banks have actually outsourced most of their business to the likes of India and other areas. We're very active on the structured trade finance side, also project finance side, and we have a very active Treasury department. And I think one of the new initiatives we've started, I think, is for our treasurer to be actually making contact with your Treasury departments as a way of actually starting off a much better relationship going forward. We have an established network of sister companies, and we also have experienced multilingual staff, which I think obviously in the trade business is essential. We regard client service as a key priority, and throughout we've been well supported by LFB, and I'd like to express our thanks for that support, and long may it continue. Thank you. We're a regulated bank. For those of you who follow what goes on in the London market, there's the FSA has now been split into two parts, the FCA and the PRA. In the London market, it's one of the few growth areas actually is regulatory reporting and compliance. It's a complete nightmare really, but it's a cost of doing the business. We're regarded as low risk within the larger scheme of things. The FCAs particularly look at low risk being a bank that doesn't have any impact really on the man in the street. As a wholesale bank, as I said, we're considerably out of the radar. As I said, we invested a lot over the last year. We've invested a lot in the infrastructure of the bank with a very strong emphasis on CDD, KYC compliance. As I say, it's a key to doing the business in London. There are a number of regulatory issues coming up, which I'm sure all of you share our pain on. One of the key issues, I think, is the last thing, EMIR reporting, which is the traded instruments, and also FATCA. Perhaps if I could just give everyone a message, FATCA is it's going to be a nightmare, I think, for all of our correspondents. And we're taking the initiative to try and get a letter out to these correspondents just to actually just remind them there's a lot of work to do. And the American government, I think, is taking a terrible, arrogant stance on all of this. But they will inflict punishment if you don't abide. So it's important to do that. Very briefly, we have a capital of £240 million at the end of December. On a Basel II basis, we have a Pillar 1 requirement of just under £82 million, so we're well capitalised. Very briefly, without going into too much detail, the performance has gone very well in the first 6 months of the year. We're some $1 million ahead on revenues, $1.8 million ahead on profit before tax. I think looking longer term, we're projecting a result around the plan. I think one of the key drivers I want to use for the build business going forward really is looking at both cost to income and return on equity. It's a very nice trend, as you'll see from the next graph, the next slide. We see a nice improvement in return on equity, 10.3 before after tax, and inshallah the cost to income ratio drops down to. Okay, thank you. Cost to income ratio dips below 48% in 2015. I think I would just make one point on the return on equity basis. We have a legacy portfolio which we incurred from HSBC or project finance assets, some $300 million. So the original maturity, 15, 17 years. The return on assets is just over 1%. So that certainly doesn't help the return on equity overall. We also have quite a chunky cost base, so I think it's important that we will be managing that in the future. But probably the easiest driver is to get more revenues through, hence the need for participations. Very briefly, I won't go into all the detail of these products. They're very vanilla in many ways. As I say, trade finance, letters of credit. I think we do it well. I think a number of you we act as a correspondent for you. And I think we can offer a very strong service. I think Treasury, again, it's an area close to my heart. Very active Treasury department, very profitable, doing very, very well this year so far. We can offer fixed income execution services. Probably the London market leader in quoting on North African and African currencies, in excess of 20 we could quote on. Experienced, multilingual, we offer a sort of 24-hour 7 service where through orders. So again, quite a sophisticated operation. I'm also very pleased to say we've actually introduced wholesale Islamic finance products this year. Wakala, fuel currency, Maraba, commodity Maraba, Islamic spot and forward foreign exchange. In theory we could assist with sukuks, but I think that might be a bit premature. We also offer banking services, which is very much payroll services, payments, all the sort of the mom and pop kind of business. But again, something we do very well and something we could certainly do for a number of the banks here. Lending, we look to finance the exporters. We're looking also at a number of medium-term structured products for the big commodity traders. We're also looking on a transaction basis in some sub-Saharan African assets. But again, our focus remains the MENA markets. We're also looking at the end there on commercial and residential UK property finance. It's an area of business we were very active in the first part of the 2000s. And then I think more because of the capital implications, we've let it lapse. But it remains a very active market. And if any of you gentlemen want to buy a property in London, give us a ring. I think areas of cooperation, just to emphasise, we're very supportive of this initiative. We see strength in cooperation. We feel very strongly that if a bank, one of us, uses another international bank, it's effectively lost income to the LFB group. So I think it's important to try and keep the business, I don't want to say in-house. Very briefly, we're looking at sort of combining BACB's strength. We're very strong in structuring and execution capability with the various shareholders, local knowledge and origination capability. And with LFB's funding, I think we'll be able to do some quite significant transactions. We would suggest that BACB Treasury could become a central pricing hub, certainly for fixed income, foreign exchange and the majors. I think a lot of you probably do sort of, will be dealing with the likes of Citibank or someone like that, but our pricing would be as competitive as theirs, and of course it keeps the spread within the group. We could carry out a concerted effort on the primary debt markets with the distribution through the various participations, perhaps coordinated centrally. We could be looking at structured investments. Again, I think there's strength in numbers here. Obviously, we all have our own particular capital restraints, but if we were to be looking at a sort of a joint initiative, and again, sort of allocated within the group, I think we could certainly see some real synergies there. We also have, to a degree, investment banking skills, which I think we can certainly facilitate the vanilla and sometimes structured products as well going forward. I think on the trade side, again, I think perhaps a improved European utilisation of limits. Again, I don't think we should compete against each other. I think it's important that we actually work closely together. Perhaps suggesting also a common country risk approach. We would like to see perhaps more letters of guarantee. We would route to, say, LFB. In return, we would like to see also some more LCs coming back our way, if possible. I think it's possible also, it would be interesting to perhaps revisit pricing on bonding as well. I think that would make us much more attractive to the global players. I think BACB could also arrange local financing through LFB directly to the European companies. I think again that would be a very active risk participation area. We believe in greater cooperation with the African units for trade business. So I talked to a colleague from Uganda. We need probably to perhaps up our game on that side. We can also initiate business with the European companies in these countries, again involving the LFB subs. Finally, on the lending side, I think we should have closer cooperation with LFB and looking at transactions in sub-Saharan Africa on a risk-sharing basis. That can either be through co-funding, where LFB is the named lender, or on a pure risk participation basis. But again, I think a bigger ticket there, I think, would be you'd be looking at higher status on the lead arranger listing. Again, I think by matching BACB's origination capabilities with LFB's funding, I think it would benefit for both parties. And then finally, I'm sure you'll all be pleased to hear, there are certain areas of cooperation I think we could look at away from our business lines. We could, as I say, I regard us as a market leader on the trade finance processing side. We could also, we could actually offer an outsourcing capability to perhaps some of the smaller banks. It would take the pressure off of their cost bases, and it's a product we would be able to offer at a very practical cost. As I say, we could perhaps also look at collaboration between entities, perhaps expertise sharing such as capability, credit risk management, internal audit, etc. So the quality of the staff is excellent, and I wonder if we shouldn't be perhaps looking to increase the numbers from 3 possibly up to 5. And again, perhaps looking at secondments going the other way as well. Thank you.